Good Thursday morning. Welcome to the broadcast, one and all. I am JD Durkin. This is the JD Durkin Show, the only live independent show from the trading floor of the, and I hope I'm pronouncing this correctly, the New York Stock Exchange. Coming up on the show this morning, the economy may be picking up, but the job market is still stuck in what Callie Cox of Ritholtz Wealth Management refers to as the Great Wait. Callie will be joining us in just a bit. She's one of my favorite all-time go-to guests. We're talking jobs, inflation, the Fed, what could push the bull market even higher. Plus, we are, as of today, 82 days away from the November midterms. I am definitely counting down. Independent reporter Aaron Parnas joins us in just a bit on the races he is following and how he has managed to build, remarkably, his own newsroom for millions of followers across social media. Finally, Matt Caruso, CFA, CMT, a man of many acronyms. He brings the charts. We're talking the Qs, the NASDAQ, the breadth, junk bonds, leaders including Dell, cybersecurity ETFs you need to know about, as well as Amazon. A jam-packed show ahead. Let's dive in. We'll take a quick look at the markets, give you a sense of what investors have in store right now on this particular Thursday morning. We'll start with a look at the S&P 500. We do have all-time highs, 7802, 7803, up 0.7% this morning. This is the highest the S&P 500 has ever been. Over to the Dow we go. Not quite at record highs, but honestly not very far off. Having a strong session so far on this Thursday in positive territory, 0.4%. How about the small caps? The Russell 2000, are you kidding me? Significantly outpacing the broader S&P 500, up more than 20% year to date as of this morning. Once again, the Russell 2000 in record-setting territory. Taking a look under the hood at the sectors in the S&P, strong start to the morning for telecom, real estate, and consumer staples. Some nice breadth, some nice rotation. You're not necessarily seeing the tech-heavy generals do the heavy lifting. We are seeing that rotation. At the bottom of the pack, only two sectors in the red as of right now. That's energy and industrials. Over in the Dow, Disney right now is the best performing name in the Dow 30. Not something I get to say very often. Followed them by Microsoft and Goldman Sachs. Your Dow laggards this morning, Cisco shares getting throttled, currently in the red, 7.7%, followed them by Chevron and 3M. But most of the Dow 30 components, safe to say, are in the green, as are all of the Mag 7 stocks. Meta, after yesterday's brutal session with a nice bounce back, up 1.6%, similar for Tesla. Amazon up 0.4%. SpaceX, not quite a Mag 7 stock, kind of a Mag 7 stock. I tend to include it. SpaceX in the red today, 2%. And now let's bring in our good friend, the man without whom the show would not be possible, the one and only Taylor Craig. We'll talk streaming, creator takeover, YouTube looking a lot more like TV. Taylor, what's going on, dude? Good morning.
Hey, thanks for having me. I love the way only live independent show from the New York Stock Exchange sounds.
Yeah, I think I pronounced it correctly. That's how we rock and roll. Taylor, the most important question I'm going to ask you, I don't mean to shed your private business. How was date night last night?
Oh, it was unreal. Well, you know what we wanted to do was go stargazing and watch that meteor shower. We drove all the way out to Jones Beach from Brooklyn and stayed there until 2 a.m. and the clouds didn't dissipate. So we got to see some beautiful clouds. And that was, as romantic as it could be. But yeah, no meteor showers last night. We're going to try again on Friday. We'll see how that goes.
That's what Jones Beach is known for, impressive cloud cover. That sounds like an amazing time. I totally forgot about the Perseid meteor shower last night. Wow, so you were up that late and you're still here doing the show.
Oh my God, absolutely. Are you kidding me? I mean, it was this and the meteor shower. I was like, the next 12 hours are going to be unreal, but a little diminished expectations on the latter or on the former. But I know this is going to go great. I'm excited to talk media and talk anything relevant to you down on Wall Street.
Commitment to the bit. Dude, let me get your take here. Let's talk Netflix becoming more and more a home for video podcast. It's First Take. It's Bill Simmons, part of my take, many others. What does this move right now tell us about not just where streaming is today, Taylor, but ultimately where streaming could be headed?
Yeah, I mean, it's a great indicator for all the people that have been hustling in this creator economy that the payoff could come in a major way, and that studios, streamers, people that are in these positions are looking to try to find that audience connection. They can create these amazing shows and these amazing pilots, but one thing you cannot get is that level of trust that a Bill Simmons has with his audience. And by tapping into these very specific communities, they're telling them there's a home for them. Go to Netflix, find your podcast. The wars right now are insane, where you have Spotify is teaming up with Twitch in a way. It's just YouTube is always defending its spot. So it's very complicated, and it's a lot of back and forth, a lot of deals shaken out. But the creator economy is stronger than it's ever been.
Dude, Netflix also has the Field of Dreams game tonight. I mean, that's the thing, right? Netflix becoming more and more of a destination for live sports. You want to watch the Field of Dream game, you got to go to Netflix. Netflix, one of the top bidders for the upcoming World Cups. I think they're carrying the Women's World Cup next year. Like, it's just, I mean, it's amazing. More NFL games Christmas Day are navigating over to Netflix. Still the clear streaming winner. Do you think everyone else is just trying to get big enough to compete with the likes of Netflix and YouTube?
You probably remember a few years ago, there was a real discussion about the role of live television and the role it played in our content consumption in the future. A lot of people were thinking, oh my God, Netflix, obviously they didn't do any live back then. They're like, the only thing we need live for is sports. And of course, there's a lot more applications to that. But yeah, I mean, anywhere there's content being consumed at a high level, Netflix wants to be there. And live sports is a huge engaged audience. So it makes sense that I think they want to avoid some outages and some other things and headaches they've run into. But they're going the right direction.
Traditional media companies. I mean, we see these headlines seemingly by the day. You have worked for them. I have worked for them. It's restructuring. It's cost cutting. It is layoffs seemingly by the month. At the same time, it seems as if the creator economy, so to speak, is rapidly growing. I mean, who better to talk to later on in the broadcast? Not only yourself, we got Aaron Parnas joining us in just a bit. Do you see this as a fundamental shift in who is holding the power in terms of media and distribution, T?
Yeah, I think to your point, it comes down to the business model and to just how these businesses are structured. And legacy media companies, there's honestly a lot of bloat. Where you're talking about a creator company, somebody who's, say a Mr. Beast, I guarantee you every single person that works for Mr. Beast knows how to cut social clips, knows how to do motion graphics, knows how to make a thumbnail. So there's these multifaceted roles that are appearing in these companies where you and I, we both know from our network TV days that you have a very defined role and you just get really good at that super specific role. Of course, television production is complicated and it's all over the place and it cannot be underestimated. But I do think that it was a matter of time before we were looking around a network control room and seeing 11, 12 positions being filled to put together something that now streamers, creators are realizing if they get a high enough quality internet, high enough quality camera, they can really put in some work and get close to a TV-like product. So everyone's sort of rethinking that, but I really think it comes down to what you said, how it's rapidly growing, how fast content is put out by these creators. Rather than, I feel like a lot of the network television companies, it was almost like steering a cruise ship every time you wanted to make a change or some sort of content slate adjustment, where now it's, if you're at a creator company and you have an idea, go do it. Go shoot it, cut it, post it. And that speed with getting content out is crucial with the attention spans that we have nowadays.
Yeah, when you and I want to change something, we just do it. Right? I mean, there's no big legal overhead. There's no steering a cruise ship in a different direction that takes many months to implement. We do it in a minute.
In 20 seconds, I could have JJ pull up Rick Astley, Never Gonna Give You Up, and we could have it next to us on the screen. But that level of, at any moment we can make those changes, it's sort of this entrepreneurial spirit that is with the creator economy that can't be replaced.
Never going to give you up, never going to let you down, Taylor. Before I go, where can people go? I got to ask you this question, dude. Where can people go if they want to see more of your stuff, Taylor Craig?
I mean, I don't know why you'd go to me when you got Rick Astley on the screen, but yeah, I mean, if you want to check us out, you can go to launchlivenow.com. Yeah, essentially all we're doing here is we are building live shows like the JD Durkin Show and some dozen terrific programs. We are pumping out live shows out of our Brooklyn studio, and we're just loving it. There's so much to do. We want our clients to be the power players in this new live space, and we're here for it.
Before I let you go, I checked the poly market odds this morning for Stanley Cup champion 2027. Your beloved Florida Panthers, the Cats, odds-on favorite.
Really?
12% to hoist Lord Stanley Cup once again next year. Don't ask me where my beloved New Jersey Devils fall on that list. How do you feel about the Cats coming up?
Hey, we were just taking 1 year off. We just needed 1 year off. Barkey needed a rest, all right? We're back. We are so back. We have both the Kachuk brothers. It's over. It's over.
Unreal.
I'm so excited for the season to kick off.
I might be more excited to watch the Panthers play than I am the Devils, but I don't know. We'll see. We still have Golden Boy.
You know we're hitting up Prudential either way.
Yeah, we certainly are. Taylor Craig, dude, pop on the stream. Obviously, you and the team at Launch Live Now doing an amazing job. Thanks for being here, brother. We'll talk again soon.
Thanks, man.
Our next guest joins us now, and I am so excited to welcome her back. Callie Cox, Chief Market Strategist, Ritholtz Wealth Management, also the author of OptimistiCallie. And as far as I'm concerned, she is also Mom of the Year. Callie Cox, welcome to the show.
That was the kindest thing I've heard in a while, JD. I'm so excited to be here.
It's been so long. All the best to you and your family. I hope everything has been well, and I'm so grateful for your time today.
Yeah, it's great to be here. Kids are great. They're babbling and cooing and crawling and doing all the things that 7-month-old babies are supposed to do, I guess.
7 months already. Congratulations to you and your family. It's so awesome to have you here today. Let's jump right in. Let's talk jobs in the economy, my friends. All the fun stuff that nerds like us affectionately really love. Economic momentum is picking up, but why does the economy, you think, still feel as fragile, Callie, as it feels?
Because it is a bit fragile. The best way that I have, or the best phrase that I use to explain the situation is that we're stable but fragile in a way. And I'll be honest, I'm flailing a little bit. Job market signals are so messed up right now because the labor force has been declining. And that tints the way that you see payrolls, that tints the way that you see the unemployment rate. It's just really hard to get good signal out of the job market, and the job market is the engine of the economy. So at this moment, we have a fresh slate of jobs data. Payrolls declined last month. That doesn't worry me as much given that the labor force isn't growing. The unemployment rate declined. Good news on the surface. Part of that could be because the labor force isn't growing. And, you look at wage growth, wages are growing at about a 3.5% rate, but that's right around inflation, which is not where you want to be. Basically, JD, you look at the labor force, there are fewer and fewer people looking for jobs, and that skews the whole picture. So that's what I mean by stable but fragile.
So a follow-up to the jobs report, maybe the negative print doesn't worry you as much. Does the fall to 4.1%, because we can get 4.1% unemployment by different ways. Does the fact that we have more people no longer seeking full-time employment, is that kind of what most stood out from the jobs print we got last Friday?
Yeah, this is a great point that you made just now, because when people think about unemployment, they think about major waves of job losses across the economy. That's not what we're seeing right now. By the way, an unemployment rate of 4.1% is historically low. It's up from what we saw about 2 years ago, but it is still quite low. The unemployment that we're seeing, and you can see this in jobs data if you break it apart, the unemployment that we're seeing is really the unemployment among new entrants to the labor force and what they call re-entrants, dropped out, coming back in. It's not from layoffs, and you can see that pretty clearly in the data. And we're in this weird spot right now where there's little hiring going on, again, because there are fewer workers available, but also, you can make an argument that certain parts of corporate America are struggling at the moment. And, we're at the point where, NFPs and payrolls are just, there's really an industry by industry story. And it all congregates into a smaller number, but you really have to look under the hood to understand what's happening.
You call this job market the Great Wait. Little hiring, little firing. Are you concerned? If so, how concerned? Should we be more concerned?
You know, I said that 2 years ago and nothing has changed. I'm getting a little bored, I'll be honest. We're still in the great wait again, little hiring, little firing, less quitting. I don't know if our viewers can relate to this, but you know, a lot of people are sitting in their job and they're saying, this is fine for now. I don't feel confident enough to step out and find a new job. I'm not getting fired. You know, maybe I just sit here and bide my time. So that's the labor market we're stuck in. Again, it is really hard to read the job market at the moment, but I'm not sure what shakes us out of this. I would imagine it, nobody can predict the future, but I'd imagine some kind of unforeseen crisis comes in and maybe knocks the economy off its axle. I wonder what can happen from the good side of things. I'm not really sure there. We're just in a really weird environment. And unless something comes in and shakes things up, we may be stuck in the great wait for a while.
How are you thinking about resilient consumer spending? I mean, I love the soft data versus hard data conversation. We know how sour so many American people, American families feel, how really the lack of certainty they have in their personal economic situation. And yet you look at consumer spending, you look at where discretionary stocks are trading here, Callie, it seems as if we have a mismatch. How do you personally square that circle?
Yeah, so I'm going to answer your question. I want to add one more thing about the job market that I actually didn't mention. We are seeing a revival in manufacturing. You can see that in the data. So one good thing that could happen is that revival in manufacturing leads to higher demand and leads to higher or more hiring in more manufacturing related industries, trade, construction, goods producers. We're not seeing that yet, but I will throw that out as a hopeful story. It's something I'm watching quickly or closely. In terms of the consumer, this is really where the pedal hits the metal. Consumer spending is 70% of the economy. Many Americans make their primary income from the job market. This is why I'm so frustrated that you can't read it very well. But consumer spending has been oddly resilient for a really long time, really since COVID and the quick but deep recession that we saw during COVID. A lot has happened since then. The job market has become really hot, then calm down. We've seen a few fiscal packages come out, most recently the OBBBA, which led to higher tax refunds. And it's been a really weird economy to say blanket statements about the consumer. Lower income consumers are feeling some stress. Higher income consumers are too feeling some stress in other areas, but their wallets seem to be a little more diversified. They feel more of this recent stock market success that we've seen. Again, stable but fragile in a way. Something could come in and shake things up, and we could see layoffs very quickly. This economy has been pretty battered throughout the last 4 years, and while it's resilient, it still does worry me that the base below it is possibly thinning out.
What is your take? Sorry, there's a first trade bell going on down here. If it gets a little loud, pardon me, Callie.
Stock exchange.
As you know better than anyone. What's your take here on what the Fed does? We got 3 FOMC meetings left. We got September, October, December. I took a look at the latest figures from CME Group Fed Watch tool earlier this morning. Looks like market participants expecting a hold now for the next 2 meetings, but a hike seems to be on the table for the December meeting. How are you thinking about the new look Fed overall? Kevin Warsh, the first time you and I are talking since Warsh took over for the great Jay Powell, and the task in front of this new look Fed between now and the end of the year.
Well, before the September meeting, you have Jackson Hole, and I can almost guarantee you that there's going to be some hiking done there. That's a joke. That's a Jackson Hole.
Oh, a hiking. Nice. Dan crushed that. Yeah, very good. Very good.
Okay, seriously, though. I was checking Fed fund futures expectations this morning. Nobody knows when a hike is coming. There's about a 33% chance priced into Fed fund futures that we'll see a small hike in September. Obviously, 33% is smaller than 50%. So it seems like markets, after the latest round of inflation data, think that Warsh will wait one more meeting. The trouble here is that Kevin Warsh is a man of few words. Jay Powell was a man of many words. He loved standing at the podium and talking about what the committee sees in the data, how the committee is thinking about policy, how the committee is thinking about the job market and inflation. Kevin Warsh, and this is just a stylistic thing, Kevin Warsh wants to compress that. He's not a believer in forward guidance. He doesn't want to warn markets about policy moves before they happen. I would argue he probably should share more in terms of how the Fed is thinking about the current economy. He doesn't talk about the job market a lot. which is frustrating for reasons I mentioned a few minutes ago. But we're at this funny spot where markets are trying to digest the style of a new Fed chair at a point where it looks like policy may need to turn. We haven't seen hikes since, I believe, the middle of 2023. So it's a pivotal moment for many reasons when it comes to the Fed. And even if we don't see a hike in September, I think one is coming. It looks like inflation is quite sticky, and the Fed is, losing its margin to do something, at least by what the bond market is showing us.
Have you ever covered Jackson Hole? Have you been out there for a Powell speech?
Oh gosh, I wish. No, I've never been out for a speech. I've obviously covered it. I'm a pretty close Fed watcher. I could name some of my favorite speeches from Jackson Hole, but I've never been.
I always
Somebody's
have
sent
FOMO
me.
when I watch it.
I know, right? It's like my two favorite things in the world: outdoor life and monetary policy.
Monetary policy in the
Sounds
mountains.
like a dream.
Yeah, I know. I absolutely love it. Let me get your take on earnings. We know the percentage we always get from FactSet and others. The percentage, I think it's more than 85% of companies in the S&P have beat, at least on the earnings side of thing. What have you made so far and of what we've seen? Obviously, we're through most of the mega caps. We're well past financials. We still got the big dog coming up on the 26th. That's Jensen Huang and NVIDIA. But what do you make of what we've seen so far, helping to push markets to these all-time highs we see, Callie?
Look, corporate America is killing it. I don't think you can argue otherwise. We're seeing 20% plus earnings growth among S&P companies. It's not just tech. I mean, tech is the leader still, but we're seeing earnings pick up for industrials. We're seeing earnings pick up for financials. There are a lot of strong stories in earnings data right now. I think the tricky part, and like you mentioned too, even the expectations are quite high and companies are hurdling those expectations, which is a really good sign. I think the tricky part here is to understand where expectations will go now that they're sky high and where this earnings growth will come from. Because analysts think that the second quarter was the peak for tech earnings. Tech earnings likely grew about 70%, which is insane, by the way, 70% in the second quarter. And some of that is due to, more organic, sustainable growth. Some of that is due to one-time investment gains. But on the whole, I think investors are staring at earnings, obviously encouraged by them. That's strengthening the fundamental base for the stock market. But they're wondering what happens next. Can we sustain this pace of earnings growth? Probably not. So what does that mean for the future of stock prices and valuations?
Callie, I'm going to ask you a question that just came in from a viewer. I do not mean to put you on the spot. If you have any thoughts on the SaaSpocalypse, Jaffeta asks, when will the SaaSpocalypse be over? I do get a lot of questions in my DMs about software as a service, about what has happened to a lot of these longtime holders of CRM and many of these other stocks. Okay, if you don't have a thought on the so-called SaaSpocalypse, but I figured I'd ask.
Yeah, I mean, everybody's talking about AI. I've seen the SaaSpocalypse with my own eyes. Say that 5 times fast. I actually came back from maternity leave, and it was in April, and it was one of the most shocking things I saw when I looked at market screens again. Obviously software stocks have been hit hard. You can make an argument that AI could disrupt in the software sector. I think investors took that narrative and ran with it. They kind of shot first, asked questions later. So it seemed to be a broad trade on software stocks. I think the story is a little more nuanced than that. I'm not sure when the SaaSpocalypse will be over, but what I would say to you is if you think the software story is overblown, if you see some potential within the software sector, then, why not step out and take a cheap flyer? That is not me making a recommendation. I want to be clear about that. But software stocks have been hit so hard that the risk reward ratio could be a little weird here, and we all know that the AI trade has been changing very, very quickly. You never know, the tides could shift back.
Where are you seeing opportunities in this market right now, Callie? It's a story of breadth. There's a story of rotation. On a day like today, you see real estate outperforming a lot of the other sectors. Obviously, we talked at the top of the broadcast of this really incredible run for the Russell 2000. Are there other non-intuitive parts of the market that are on your radar that you think the rest of us should be paying a little bit more attention to?
Well, this is a little boring. I'll admit it right out of the gate, but I like the idea of balance in a portfolio. I like predictable returns. I'm not always looking for that golden ticket stock that's going to take me to heaven. I'm trying to, manage my sanity along with, investing in a market that is going through a lot of crosswinds at the moment. So I like value here. I think that there are still some interesting pockets of valuation in the stock market. I think the housing market is a little interesting here, not because I think demand's going to pick up tomorrow, but because rate-sensitive stocks have been beaten down so hard, and the 10-year is near an 18-month high. Why not take a cheap flyer, right? And if you think the consumer is improving, you could probably make a good argument for housing stocks here.
Callie, I'm so grateful that that you are back and that you are able to join me here today. Before I let you go, where can people go if they want to see more of your stuff?
Yeah, so I have a newsletter. It's OptimistiCallie. I'm not going to spell that because I'm going to stumble through it, but Google OptimistiCallie, follow my newsletter. I'm on Twitter, I'm on Instagram, and I'm on Blue Sky.
Mom of the Year, Callie Cox, my very best to you, your family, your kids. I'm so excited to see you. Please come down and see us here at the big board soon.
Yeah, absolutely.
All right, we'll talk to you again soon. Coming up on the other side of this quick package, the one and only Aaron Parnas will be joining us. But first, here's a look at my conversation with Caleb Silver, editor-in-chief at Investopedia, on yesterday's edition of Taking Stock. Take a look. Let's bring in our very good pal, the one and only Caleb Silver, EIC at Investopedia. My man, nice to see you. Thank you for being here. Okay, so you and I were talking today. We've got some amazing ticker symbols. Let Them Eat Cake, EAT and CAKE, Brinker and Cheesecake Factory, respectively. All-time highs. What's going on here for these restaurant stocks?
I've been digging around the restaurant sector. Just today we had some earnings out from Cava yesterday. We had Brinker International with a conference call this morning. These stocks are killing it right now. I don't know if you saw Cava shares up 15% today. Same store sale increases quarter after quarter. When everyone's concerned about inflation, you see this middle dining segment. Fast casual, a little bit higher than fast casual, doing fantastically well. Brinker, you don't know, but you do know Chili's. That stock up 5% today. 5 straight years of consecutive same-store sales growth. A recovery in a lot of these stocks when people are worried about inflation, they're worried about tariffs, they're worried about spending. This middle market is doing fantastically well in the restaurant sector. Eat cake, let them eat cake, all-time highs.
Now people are looking at this saying, wait a minute, I feel so stretched as a consumer, and I know I'm not alone. We see the soft data. We see how sour far too many American families feel in terms of how little they feel their dollar actually goes. Is that a little bit of a mismatch with the reality we're seeing from some of these names?
100%. We feel terrible. We've actually never felt worse if you're looking at consumer confidence from the University of Michigan, yet we continue to spend. We'll get the retail sales figures on Friday for the month of July. We were still spending, even though we're complaining, and airline tickets are up 25% from a year ago, and they're up something like 45% from 4 years ago. We still continue to spend. The front of the plane, jam-packed right now. Tough to get restaurant reservations. We're continuing to do it. We're driving ourselves further into debt, complaining the whole way through, but spending has held up because balance sheets are pretty okay among the American consumer.
I remember a lot of guidance over several quarters from the major airlines, but also the restaurant players about the proliferation of GLP-1s. How has that shaken out so far versus the earliest expectations from analysts here on Wall Street as it pertains to a lot of these stocks?
Yeah, look at Cheesecake Factory, all-time high. That'll tell you that it's not as big as we thought it was. Now it's impacting other industries significantly. Talk to anybody in the adult beverage sector. Sales have been falling for the past 3 to 4 years. That is a trend in motion that will not stop. Other sectors are actually doing rather well. There's a lot of tourism now around GLP-1s and longevity and wellness travel. That's on fire right now. Experience travel's on fire right now. We can't get enough of Europe as Americans. We're over flooding that continent. They want us out. So we're still traveling, we're still spending. That GLP-1 thing is a mega trend in effect, impacting some industries, but not all equally.
I know you are still just as buzzy as I am here in summer 2026 in the greatest city in the world, Nixon 5. How about MSGS up another 5% today, appropriately so. Another all-time high for Madison Square Garden Sports. How are you matching that news story with what we heard out of the Los Angeles Lakers here today? Big one.
Surprise purchase of the Los Angeles Lakers, $12.5 billion. That is one of the most valuable franchises in sports. But guess what's a little bit more valuable? Your New York Knickerbockers, ticker symbol MSGS. Dolan has been trying to split out the Knicks from MSGS. That's at an all-time high, but guess what else is? Sphere. So Mr. Dolan having a very nice middle of the summer right now after bringing in the Natty for the New York Knickerbockers in this great city. So that stock's at an all-time high. Sphere's at an all-time high. We're seeing a lot of all-time highs across sectors. A couple of other stocks making all-time highs. These stocks are 100 plus years old. JP Morgan, all-time high. Bank of America wasn't always Bank of America, all-time high. You're seeing a lot of highs with old companies, and GE Aerospace finally took it 30 years to come back to all-time highs.
Wow.
It's back as GE Aerospace, minus the refrigerators, minus the light bulbs.
See, we love cracking the history books with Caleb. This is what we do, and we authentically talk about the stuff as much off camera as we do on.
We're geeks.
Yeah, we definitely are. Before I let you go, CPI print basically in line with expectations. What are you looking for wholesale tomorrow that could be on the radar for investors?
Same thing. You're going to see a little bit higher energy prices. You're going to see how that bled in to some of the producer prices. But we know where we are with inflation. We're between 3.5% and 4%, and consumers feel like it's a lot higher. Producers are passing some of those costs on. It is not affecting investor sentiment right now. Why not? Earnings are strong, my friend. Ed Yardini talks about FOMO or FEMO, fear of earnings momentum, missing out on that. If you haven't been playing earnings momentum, you haven't been participating in the rally right now. Earnings up 50% consecutive quarters, 50% quarter on quarter. Guess what? Expectations for 27 and 28, sky high as well. And what are we here for? Earnings growth, cash flow, free cash flow. We're getting it. Are you not entertained? Almost at all-time highs yet again.
Call him the Jalen Brunson of financial broadcast media, the one and only Caleb Silver, good friend of mine, good friend of ours here on the show. My man, come back anytime. Nixon 5, special thanks there to the great Caleb Silver. Speaking of great, how about this guest? He is an independent reporter. He is the author of the Parnas Perspective. He is also incredibly prolific on every single imaginable social media platform known to man. Please welcome to the JD Durkin Show, Aaron Parnas. Aaron, great to have you. Great to meet you, man. Grateful for your time here this morning.
Yeah, thanks for having me. Super excited.
So we'll talk a bit about your process as a creator, which I know is fascinating to so many people, but I want to talk midterms. I want to talk politics and kind of some news of day, because you've done an incredible job reaching people where they are on these platforms, talking about these issues. I'm a longtime campaign trail reporter in a past life. As of today, Aaron, 82 days out from the November midterms, what is your personal read on where things stand right now for both parties that are trying to find their stride, trying to find their identities?
Yeah, I think my biggest takeaway right now is that anything that anyone tells you today about the midterms in 82 days, they will be wrong. The polls will likely be wrong. The pundits will likely be wrong. I think right now we're in a position where Democrats obviously have an advantage just because of historical trends. You have a Republican in the White House. Democrats in a midterm year will likely overperform. And yet at the same time, we see Democrats underperforming in Wisconsin and in Michigan, and primary polling just be completely off. And so my biggest takeaway right now is that no party should take any voter for granted, because we are in an 82-day stretch, but it's a sprint. And ultimately, any prediction I make today is going to be wrong in November.
Dude, can I get your take on what is going on with the polls? Because we had the El Sayed race in Michigan, where it looked like he was going to win by a lot more than he did. Obviously, we just had this race in Wisconsin a couple days ago where the outcome was a lot different from what people were expecting. We kind of really first saw this in 2016, and maybe the theory was, well, you got some kind of quiet, shy voters, maybe not telling pollsters what they're going to do, and then they walk in the ballot box and they do something differently. Do you have a sense as to why these projections are, at least right now in this climate, so off?
I have a few theories. The first is that leftists love to take polls, whereas more moderates don't like to take polls. The second theory that I actually haven't seen many people talk about is I think with the rise of prediction markets, I think prediction markets are driving polling in many respects. And so when you have a prediction market say that Francesca Hung is 95% odds on favorite to win, you ultimately see polling reflect what the prediction market is saying. And when the prediction market is wrong, the polling is wrong as well. So I think that is part of it as well. And I think the final thing is for example, in Michigan, it was an open primary and you didn't have a Republican Senate primary. Mike Rogers just won. And so you really did have Republicans probably cross over and vote in the Democratic primary. And you're not really polling those Republicans when you're polling a Democratic primary electorate. So I think it's a combination of factors, but I think it's only going to continue heading into November. And the polling industry really needs to take a look at what it's doing.
Aaron, what's one story for this year's midterm election that you think we should be talking more about?
Yeah, I mean, I think the biggest story that we need to be talking about right now is the fact that the war in Iran is actually still plaguing. It's really pissing people off. And I think a lot of people have apathy when it comes to the war. They've gotten tired of hearing about the war, but we're now 6 months in. Troops are suffering on aircraft carriers abroad. And Republican senators, they're getting blown up on Capitol Hill right now by constituents on the left, on the right, in the center. And they're saying, we are fed up with this. It is taking too long. We want to end this quickly. And so the fact that the White House isn't necessarily responding to what they're seeing on the ground, it's a story that we need to be monitoring.
Dare I ask, do you have a way too early sense on how 2028 is going to shake out? I know it is far too early, but at the same time, we kind of have these early candidates maybe jockeying for a little bit of attention in the spotlight, maybe the AOCs or the John Ossoffs on one side, the Rubios and Vances on the other. What's your read on that?
So on the right, I'll predict that it's going to be a Vance Rubio ticket, and I don't think it's going to be really that much of a competitive primary. I think Trump will just kind of anoint Vance and Rubio and say, this is what I want, do it. And we'll see if they follow through with it. On the left, I think what we're going to see is a repeat of 2020 and that everyone and their mother runs, because they learned that in 2020 you can run and it won't actually hurt your political aspirations. Anyone can run. A mayor from middle Florida can run and he can get some airtime and it won't hurt him in the long term. So we're going to have 20 plus candidates running. I think ultimately on the left, though, you really have three kind of top dogs right now, and then a dark horse, in my opinion. You have Kamala Harris, Gavin Newsom, and AOC are kind of like the top, and then John Ossoff as my dark horse pick. But listen, anything can happen. We're 2 years away.
Yeah, dude, remember that 2020 primary? They used to do 2 nights of debates. I remember I was at the Fox Theater debate in Detroit. It was a 2-night event because you couldn't get everyone onto one debate stage. You had people like Jay Inslee running for president. Like, if you look back at that list, you'd be like, oh yeah, I remember that person. So you kind of think we might be heading for a repeat of that year.
100%, because none of them really faced any political backlash for doing it. They ran, they raised money, they lost, and then they gained some followers on Twitter.
I'm really, yeah, for sure. I'm really interested in your process and what you've built online. It's an incredible community. I see the comments. You've become such a trusted go-to voice, seemingly in a relatively short amount of time. How do you go about separating signal from noise when deciding what type of content and stories to cover day to day?
Yeah, well, first, I'm a lawyer before I was ever a journalist. And so I approach all of my work through the legal lens, in the sense that I would never put anything out on my platforms that I wouldn't put in a brief in front of a judge. If I lied in front of a judge, I'd get potentially disbarred. If I lie on air or on social media, I deserve to lose my platform. And so that's kind of the approach I take to all of it. I'm a bit of a maniac in the sense that I have 4 or 5 screens in my house, in my office, all at once. One has like a constant ticker of every Truth Social post and tweet every member of Congress and world leader is posting in real time. One has all the court orders coming in. I have my email inbox flooded with tips constantly. And I'm also just always trying to educate myself and read other reporting from investigative journalists. So it's nightmare fuel for anyone who doesn't have ADHD and is in type A like me, but alas.
Well, listen, it's the type A. It's those of us who are type A that do this for a living, for a reason. Either we're lawyers, we're journalists, or we do this sort of thing. What is one place, or rather, what is the first place you look for when breaking news hits?
Trump's Truth Social feed, because I want to see what he's saying on it. Now, I'm not paying the $100,000, so I may get it later than some other folks, but that is the first place I go whenever breaking news hits. And honestly, not just his Truth Social feed, but Truth Social generally, because I love to see how the right thinks about topics in the news these days. And so I ingest a lot of that, and then I go to my reliable kind of investigative journalists at like ProPublica, Wired, elsewhere, that really do kind of deep dives into these pieces and learn more about things that I may not get from just a Reuters or AP wire.
What's the first app you open on your phone in the morning?
Right now it's Nanit, because I'm watching my baby, my 4-month-old. So it's her, the camera in her room. So I gotta watch her. But after that, it's probably Twitter.
Oh man, congratulations on the newborn, dude. What a blessing. That's tremendous. What do independent creators understand about news? Yeah, applaud for that one for sure. What do independent creators understand about news that traditional media still gets wrong?
I mean, I think the biggest thing is that we're authentic, right? Like the way I am right now with you, I am on camera, I am with my wife, I am with my daughter. I talk the same, I look the same. I don't think I make it a point not to wear a suit in any interview I do with the governor, with the senator, with vice president. And it's intentional. It's because I don't wear a suit in real life. And so why am I going to dress up and try to be someone who I'm not? And so the authenticity factor is something that mainstream media still hasn't gotten.
What is the hardest part about essentially being your own newsroom?
Well, I can't take a day off because if I take a day off, I'm not making money. I can't sustain my life. And if I take a day off, then someone else will come in and try to swoop it from under me.
Speed matters in your business. It matters in my business. How do you balance being first with also making sure you're right?
Well, oftentimes being first is easy because what I'm reporting on is not necessarily the truth of the report, but rather the existence of the report. So if Trump put something out on Truth Social, I report that he put it out on Truth Social and share what he put out. I'm not going to go into whether it's true or not. That's not my job in that moment. And so if you're just reporting on the firsthand source and what exists rather than the veracity of the content within its existence, then oftentimes you can be faster and not really worried about whether it's true or not, because you're not saying it is true or not. You're just saying that it does exist.
What is one lesson you wish you had learned even a little bit sooner in your journey as a news creator?
I think learn how to take a break and set better boundaries and honestly set better boundaries with your online community. I think when I had a daughter, when she's now 5 months old almost, and everyone wants to see a picture of her, and people get mad when I don't share a picture of her. And I'm like, the internet is a scary place. You're not going to see a picture of her. And I think being able to set those boundaries earlier on was probably more important.
That's awesome. Give me your sense on the sorts of things that you're not yet doing in terms of your career. Are there new ambitions? I'm sure you're cooking on a lot of things you can't quite yet reveal, but anything that you've thought of like, yeah, at a certain point, I'd like to scale and do X, Y, Z. I'm not quite there yet, but give us some sense of what the next iteration of what you built looks like.
Yeah, so a journalist I really look up to is Caruso at CNN, and I want to replicate what she's been able to do in a lot of respects overseas. So I'm working on major projects for example, in East Africa and in Ukraine, where my family is currently, to kind of share from the front lines of what is happening, whether in an Ebola crisis, in a war, and do kind of more investigative 60-minute style pieces. So those are coming down the pipeline. It just takes a little time to produce and all that.
And may I say, I hope for you personally that much like Clarissa Ward, you could be both a kick-ass global journalist and also do a fun dancing TikTok that deserves the ridicule of politicians in Washington.
Hilarious. I mean, I loved the TikTok. Why not?
I'm like, of all the people to go at, really, Clarissa Ward,
Right.
One of the greatest to do it in our lifetimes. Aaron, you've been really generous with your time, man. I have been looking forward to this conversation for a long time. Before I let you go, as if they don't already know, Aaron Parnas, where can people go if they want to see more of your stuff?
Yeah, on my Substack, the Parnas Perspective, or on my YouTube, Aaron Parnas 1. Go check it out. This was awesome. Would love to be there in person at the stock exchange next time.
Have you ever been down here to the big board?
No, I'm scared of New York, personally. It's too big, too many people. And I try to avoid New York like the plague. But I will be there soon, hopefully.
Please come down. Please shoot me a text. We'd love to have you down here. The entire New York Stock Exchange community would love to see you and meet you. My best to you, your family, your newborn man. Nothing but the best. Thanks for joining us today.
Thanks for having me.
Our final guest on this 15th episode, I think it's 15, I lost count a few weeks back, of the JD Durkin Show. He is a CFA. He is a CMT. We love the CMT Association. He is president of Caruso Insights. Please welcome to the show, Matt Caruso. What's going on, dude? Good morning.
Hey, good morning, JD. How you doing today?
Doing well. I feel like you were doing some traveling, brother. I feel like, we linked up a while back. You've been booked and busy. I hope everything's been going well.
Beautiful. It's very hot in Italy in the summertime, so I had to come back here for a little cooler temps, but beautiful time.
Jeez, so I feel like New York, we've had a sweltering summer, an amazing summer. Because I don't know if you heard, the Knicks won the championship in Game 5. We're still riding that high.
I'm a big Yankees fan, so it's all good.
Yeah, you got it. Yeah. Hey, Yankees are looking good. You brought us charts. Excuse me. Right. We're very pro charts on the JD Durkin Show, especially from our friends at the CMT Association. The strikeout sound. Thank you, Dan. Producers, on the chart one we go. Matt, let's talk the Qs. Back near its highs, but your so-called FOMO indicator, north of 50%. What does that mean, and what do you see here?
So in this market, the real kind of, I think, bull market kicked off back in March, end of March, rather, start of April. And that's where you really get one directional momentum, like what everyone loves, but everyone's always scared to do at the beginning of the bull. As you enter into kind of the more advanced stages, as you saw maybe 4 or 5 days ago, we hit kind of like an elevated level, which is when everyone has FOMO. It looks at how everyone's been treating most stocks. That's when it's time to back away. Later in the uptrend, you have to be a lot more tactical if you don't want to get swung around by these big moves. But you can see we kind of went sideways, and this is last night's chart. And as we got back to neutral, we had the strength today to push up into new highs. So market uptrend is good, but you have to just kind of keep in mind the short-term extensions so they can be painful.
Producers, chart 2 to the NASDAQ composite we go. Market breadth, new highs versus new lows. NASDAQ itself back near record highs. How strong is the breadth that you see underneath the rally? What do you see when you look under the hood here, Matt?
Well, that's what the green bars are showing us. There's more stocks making new highs and new lows. And even more importantly than that, which, we're not going to dive into the details, but is as long as not a lot of stocks are breaking down. So you have these rotational markets. Everyone kind of gets worried, like, oh, AI is taking a break. The market's over. But as long as some new leadership takes the lead, we're okay. So this is really shown since that bottom. We've had persistently strong markets under the hood. We still have that. So whatever worry people have, until it starts to show up in stocks breaking down, you have to just kind of put that on your worry list, but not actually make it touch your position.
To chart 3 we go. High yield and junk bonds. Now it's a party, dude. I love you brought us this. Junk bonds pushing to new highs. Why is that an important risk on signal for stocks? I love this conversation because it's not something intuitively we talk a lot about, but I'm glad you brought it to us today.
This is my favorite tool. Everyone will look at what the Fed's doing and all the rest. Of course, that's the core that moves things. But for the stock investor, I mean, you can look at periods where interest rates fell, like early 2008, but that was a sign of bad things. What's great about junk bonds is that they reflect both the interest rate environment, but they also then after will show like what the risk concerns are in the market. So as long as this is still strong and pushing higher, the bond market's kind of confirming there aren't any kind of elevated worries, nothing is breaking down. So basically all of my risk on tools are still saying be risk on, and the FOMO indicator is just there to kind of check me if I'm getting a little too excited in the short term in terms of positioning to kind of tactically adjust things. But the longer term in terms of trends, despite always constant worries on the media, whether it's Iran or what else, the markets are healthy under the hood.
A quick follow-up on this. Would you expect to see something crack in the junk bonds world before we see that reflected in equities, or not necessarily?
They tend to be kind of a coincidental indicator. They'll probably break together, but I like to have both because sometimes something can trigger from the bond market first. So, you always have kind of the two important views in front of you at all times.
Chart 4 producers, if we can. TWLO, Twilio. Love talking about the stock. Just broke above its prior high around 240. Is it a leader? And if so, what makes it a leader on your bingo card, so to speak?
So I think the AI is going to be obviously the thing of our generation in terms of technology, but everyone's been just looking at the hardware stocks. You have to look at how is the AI movement going to kind of permeate everywhere else. So we have all these agents and talk of agents, and they still have to talk to human beings. So Twilio has the whole stack of where messaging can be automated, whether it's to SMS or to email or whatever you want. And so you can see it's back-to-back earnings where the company is kind of surprising to the upside. We've had these very powerful surges. So this is one that has to be on your leaders list. It's a little short-term extended. I don't like buying just right above highs, but as it consolidates here, this is, I think, setting up a really good kind of risk-reward setup in a company really benefiting from the agent rollout and maybe an indirect way people wouldn't expect.
Let me ask you about the technicals on Twilio. Producers, let's keep up chart 4. What tells you that a breakout like this is real, not necessarily a head fake or a false start? What does the chart tell you more specifically?
Well, you can see the amount of volume that came in on that breakout, and we sustained past the earnings date. So another important thing is also kind of closing above the prior high. There are so many of these intraday kind of quick movements that are very algo HFT driven. The ability to close and then sustain for a couple of days are strong. That momentum may cool for a few days, which is what we're seeing. But that really kind of then, as long as the original breakout is actually very powerful, it makes you want to be a buyer on any kind of softness.
To clarify, are you talking about the breakout from, it looks like May 1st, or you're talking about this more recent one from the 7th?
So we just broke above that horizontal line. So that's kind of the starting point. That was the prior high we broke above. And so now we're looking at how we can kind of sustain it above that horizontal line from early June.
All right, on to chart 5. Let's talk Dell. I had a bit on Dell on yesterday's 4 o'clock show, breaking through its prior high after months of consolidation, though, as our good friend Jay Woods is fond of saying, sideways is a direction. What do you say in the CMT Association? Longer the base, higher to space? Or did I get that wrong?
That's one of the classic sayings. And in addition to that, what's interesting about Dell and why it's been one of my top focuses is July was brutal for the AI hardware space. Chips and storage, everything took massive drops. The stocks that are most resilient, it's not that Dell holders didn't notice the sell-off. It's that there was still enough buyers to offset all of that inflow of selling. So that resilience really showed that this was a stock in high demand. And you can see also one of the first AI kind of hardware stocks to get to new highs. definitely on the leaders list. We see more follow through today, and even its kind of sister stock, HPE, which is in a similar business, also doing very, very strong.
What does Dell's strength overall tell you about the broader AI infrastructure trade? And I guess taking a step back, what do you make a lot of these companies that maybe for a generation were known as one thing? And I mean, it's not like Dell changed its name to like Dell.ai the way a lot of other companies are doing, but now we're kind of viewing them, at least the market participants are viewing them fundamentally through a different lens than maybe what we grew up knowing the brands as.
Well, this is the whole argument, right? Even with the memory storage stocks, whenever there's a big advance and the PEs fall because earnings have become big, the question is, are these earnings going to sustain themselves? So same with Dell. Typically, it's a cyclical company in a sense that there's a lot of demand for compute, then the economy slows down and that backs off. Are we in a new era where there's going to be this tremendous persistent demand for all of these products? If that's the case, that's why we're getting this re-rating higher, because people were pricing these stocks to kind of be, oh, it's just the latest bump up. People are renewing their tech cycle. But the reality is that there's probably a much bigger push going on here, and Dell's reflecting that, and that's showing. I think there's going to be a lot more staying power and earnings for these companies, because Dell is really, in essence, just a broad-based technology provider in terms of hardware.
To chart 6 we go. CIBR, the cybersecurity ETF, we're seeing new highs after a big run since May. The group is leading. Why is the group leading right now?
So this was an interesting head fake. I remember even Warren Buffett, I said this when AI started a couple of years ago, that this is going to be the biggest boon for like scam artists in history. And so This was always on my radar as a sector and a theme that would benefit from AI. We need better security. But that wasn't as it was going. It was kind of lumped in with software and it was soft. But now I think with all the new, Fable was released by Anthropic, and everyone kind of realized suddenly, oh wow, all the kind of the AI strength is now really going to be impacting cybersecurity concerns. And I think every CEO is rushing. If you look at a lot of CEO surveys, they've kind of also shifted some of their spend from just AI deploy to like AI defense, because it's moving so rapidly. So again, one of the stocks that was strong leading off the March bottom, and through the July sell-off, this maintained very well, first to new highs, another leader along with Dell you have to have your focus on. Again, short-term extended, but retracing for a few days and there's a little bit of softness. That's where it's nice to deploy capital once more.
But I mean, the fact that it's the ETF that's moving tells you it's not just a handful of generals that are cybersecurity giants doing the heavy lifting, right? I assume this is more of a story of breadth, a bit more under the surface, specifically for this sector.
You're seeing, the kind of, like you said, the leaders like a Palo Alto, CrowdStrike, they're very strong. But there's other stocks that are, for example, Rubrik, which is all about kind of data management, data protection. They're very, so it's kind of the whole cybersecurity defense theme moving together, which it makes sense. This is such a thematic bull market because AI is not really a company. Like, it's not like Netflix is reimagining, how people consume TV. Like, this is AI is broadening throughout so much. So there's a good environment for ETFs because the themes are going to be what's powerful. It's not necessarily a company specific demand driver.
Finally, Amazon. Let's look at this Amazon chart you brought us. Amazon stock currently on this Thursday morning up about 0.25%. It is the worst performer of the Mag 7 stocks, at least this morning. But to be fair, they're all up in the green. Amazon, what a bounce back year. Remember where we were with Amazon this time last year, the laggard of the Mag 7. Now it's up almost 16% year to date. What do you see here? How important are the current technical and trading levels for AMZN?
So this is a good example of why I put those horizontal lines in at prior highs. So we took out the prior high on those powerful earnings. And again, later in a market uptrend, it's like a small dynamic that people will not realize is just so critical when you're deploying capital is those like clear breakouts above a new high. The first breakout almost will always fail. It doesn't mean that that the trend is not healthy. They had incredible earnings, kind of, I think, shocked the street of how strong they were. And we're getting that normal kind of pullback here. I haven't been a big fan of Mag 7. I think they have, in a lot of ways, the most to lose if new competitors kind of move in. But Amazon really, presented some powerful earnings, big move up. As this kind of consolidates, this now gets back into kind of a viable zone. And for those who do like the kind of the comfort of a major kind of more diversified tech company, Amazon can kind of provide that, as well with some new catalysts that should be able to push this back to new highs.
Before I let you go, you're a CMT.
Right.
You're a man of many talents. You're also a CMT. Do you have a favorite trading indicator? What is like one thing on your charts you look at, regardless of the stock, regardless of the ETF? What's your absolute go-to favorite?
Mine is I always have relative strength. I have the index up and I have my stock, and I want to make sure my stock is doing better than the index. That's my key.
I am very grateful for your time this morning. I'm glad we could finally make this work, dude. Please come down and see us here again. Before we let you go, where can people go if they want to find more of your stuff, Matt?
You can head to CarusoInsights.com. You can also find me on YouTube at Matt Caruso Insights. So plenty of places to find me.
Matt Caruso Insights, my man. Take good care. Best to you, and you and I will talk again soon.
You got it. Thanks, JD.
All right. 2 minutes to go. We're going to tick through a few of these comments here. Wow. I mean, we had comments flooding in here for the broadcast this morning. That's what it's all. This is what we do, folks. It's why you wake up. It's what you lift all them damn weights for, as Bill Parcells said back in the day. Special shout out to TikTok. I think it's the first time that we streamed vertically on TikTok. I need to confirm that, but thank you for all the comments. In the last few minutes, we've got some comments here on PPI data. Thank you for that. We had one viewer watch who said, excellent content, impressive. Glad I found your feed. I'm very glad you found our feed. Thank you for watching the broadcast today. Bullish on P-Sky. We talked a little bit about the Paramount story very early on in the show. We'll talk about it more next week. We got a comment that came in about SoFi. I particularly find the fintech stocks really fascinating on my trading view. I have them broken down to their own little category to see how SoFi and Robinhood and a lot of the others are kind of performing. We'll drill down on that next week. Thank you for the comments from Jarito, Jack Donahue, Patrick Kalam, FR10, Vanks, Vincent Ferrer, and so much more. And I think that's going to do it. So we got a minute left of the show. So that's it. We got a new episode of the JD Durkin Show, our 16th installment of the only live independent show from the big board, next Thursday, August 20th, 10 a.m. I don't know everyone who will be on the show, but Cullen Roche will be on the show of Disciplined Funds. He's also author of the book, Your Perfect Portfolio. Always great to have Cullen. We'll chat with him next week. My special thanks to Launch Live Now, the entire broadcast team up on the 12th floor here at the New York Stock Exchange. Later on today at 4 o'clock from this iconic trading floor, whole new edition of Taking Stock. You're stuck with me for the close, hosted by yours truly. My special thanks to all of our amazing guests and everyone who tuned into the broadcast today. I'll see you again later on today at 4 o'clock.